What's up, everybody? Good morning. Welcome to Trading Live with Bubba. And of course, markets are dead as they were on Tuesday. There's a potential trade here in crude oil if we want to look at it. Again, it's very, very quiet. It is very tough to trade right now. There's very little action in the market. You're getting a lot of whipsaw, again, which takes away some of the advantages that we can take in a market, but certainly crude is something to look at, and let's take a peek at it and see if we can get a trade here. Our stop would be 73.72. If we get, but we don't have a trade yet. We have to wait. But now that we're starting to get into a little bit of consolidation, probably not as good as it was a couple of minutes ago. So more likely a pass. I think we'll just take a look at our normal stuff because, again, there's not a lot going on here, and I wouldn't encourage you to get too involved. We're trading at about 35% of normal volume as we head into the end of the month here. We got a week to go, and it should be excruciatingly slow. But as we take a look, so we look at our Apple. Okay, Apple is just kind of hovering, close to overbought. But again, I'm not interested in getting too involved here. I don't see the reasoning behind trying to trade into a very dull market. You know, dull markets themselves have a tendency to drift higher. And you've seen, I don't know, about 150 points or 200 points swing in the NASDAQ back and forth. Again, unless we get something that would be considered almost an automatic, you know, the Amazon in the middle of nowhere. What am I going to do here? Make a guess? I'd rather just sit. I'd rather wait. I think that patience is much more important in these types of markets. Coin, again, right in the middle of nowhere. So once again, we were on the right side on the way back up. Now it's stalled, but I don't want to buy it. I don't want to sell. Okay. Crowd, a little bit overbought here. This is one you could look at. I mean, this has got a legitimate chance. You could sell some call spreads for tomorrow if you wanted. Again, I'm not encouraging you to do much of anything right now. I'm encouraging you to be more passive and more patient because, again, these very thin conditions can whip you around a little bit and hurt you versus help you. And I think that that's something that's more important to understand and learn. Meta, again, got overbought, came back, but now it's running again. So, again, I don't see a trade here right now. Google, again, right in the middle of the range. So where's my choice? What's my trade? Okay. IWM in the middle of the range. Once again. Now, again, I do see some resistance, but with the lack of volume, with the lack of market participation, I'm not all that interested in getting involved. Okay. It would have to be something that would be awfully good for me to want to trade into as I look at this market, because there isn't, look at these ridiculously slow numbers, okay, that just don't really give us, you know, great opportunities. And I think that's something that you have to recognize as a trader when the markets are not in your favor. And your Moderna, which we thought might have found a bottom, it's still higher than it was, but it certainly is really just now kind of consolidating between, you know, 80 and 90, okay. Microsoft, again, reached a little bit of resistance, but has not gotten to a point where I can say that we have a high probability edge here yet. So again, I'm going to be much more to the conservative side. On Tuesday, we said sell nugget. Okay, we did it live here. We sold that deep in the money spread. It is paying off. Okay, now again, it didn't pay off yesterday, but it is now paying off. Okay, and it is now nicely profitable. And again, you could look, if you put the trade on, you could look to take the profit, or you can look to see if it may continue to run a little bit further to the downside. I mean, certainly I would expect it to come all the way back down to 44, 45. Okay. And but again, remember, we have this trade on for tomorrow. NVIDIA, again, a little bit overbought, but not, again, nothing that when I'm looking at these lack of volumes and lack of participation, it doesn't interest me to be overly active, okay? Because I can only find trouble by being overly active. I'm just taking a look to see if there's anything showing up here, and there really is not. So we'll go back. The Qs, very close. Now, I would have no problem selling call spreads for today, okay, in the Qs. I've already sold them, so I'm not going to do it again, but I'm already short the 483, 485 for today, okay? And I'm also short the SPY already coming in, but I would have no problem doing them here either. I think those are reasonable plays because I suspect that we're not going to see a runaway today. I would think there's probably a higher probability that the markets close a little bit lower on the day, and not because I'm bearish. It's just we've been up every day. You would expect to see some calming, but again, there is always risk. That's one thing you have to remember. Square, which we talked about the other day, got up to very overbought conditions, is coming back down very nicely. The SPY, again, it's up there, and certainly I wouldn't have a problem if you wanted to do a daily, okay? Because again, you know that trade's going to expire in 4 hours, okay, or 5 hours. So again, it's a different type of trade, but I don't see a ton of things going on here, nor do I see a ton of opportunity. Notice when that we were sellers of put spreads consistently, okay? Again, I think that you have to continue to watch and let the markets trade for you. Zoom is zooming. Okay, had earnings last night. Now this is something that I would certainly sell. Okay, because again, not because I'm negative, but this is what we would call a blow off. Zoom is up 20% in 3 days. I would certainly look to sell it. In fact, I'm gonna look at it right now while we're together. Okay, and Zoom. Let me just put it up here. I know you can't see it, but I only have so much capacity to share. But certainly I'm going to look to do something here. And 62 and 68. Okay. Okay, so I would look at selling the 60-68 call spread. Okay, the 60-68 call spread, and I would look at it for tomorrow. Okay, and that would be at 60-68 would be at 692. Okay, so it would be a $1.08 worth of credit if you wanted to make that trade. Again, that's up to you. You're getting about a 25-cent discount to buying the put itself. And of course, you have some room here, but that's what I would look at. But first, what I would be looking for would be to see on a shorter time frame. And again, you can pick your own time frame. But right now, there's no reason to sell it. I would need a couple of red bars that would show me that it has finally reached its peak. Okay. But again, that's what I would be looking at because that is a true blow off. Okay. And certainly one that I would like to try to take advantage of. But other than that, I think there's, again, very little going on right now, very little activity in this market. And that leads you to those much bigger swings. And I think that you just have to be, much more cautious in this market because of the lack of activity. Okay. Again, it's not that I'm, scared to trade, but I like to trade with an advantage or with an edge. And right now, I don't see much for me to do. In fact, when we're done here, I'm out for the day because I'm not going to sit here and torture myself watching this thing whip back and forth on minuscule volume. I mean, this is typically the volume you would see in an overnight market. So for me, I'm saying, well, what's the point? Why do I want to participate in this market that is really not giving me much to participate in? And I hope that makes sense to everybody, but the best advantage you can always give yourself is when things are moving, okay, and when is volume behind it, because you can get the feel of the fear or the panic or the chasing of others that are involved in the market, okay. And right now, with the lack of overall participation, there isn't much to look at, so it's hard to really grab a significant edge because of the lack of volume. So right now we're heading south, but you're heading south with no volume. Normally you would expect to see a bigger volume move as the market starts heading lower here. The VIX is not popping very much. So it kind of indicates that we're probably not going to go significantly lower at the moment. So again, we can sit here and watch and look at this for a while. This will probably be a little shorter than usual because there's really nothing to do. Okay, other than the one trade that I would look at was Zoom and Nvidia, if you want to look at it in crowd. But again, I'm not even telling you that I would necessarily want you to get involved in those, because the little bit of money you might make is really muted by the risk that you're now taking because of the lack. I think the only clear crystal trade would be Zoom, which is not really qualified yet. Okay, but it might while we're here. I don't know. I'm going to take it down to a 4-minute. Okay. And it's still kind of heading up. So there's really no reason yet. And because I don't have a trigger to say, okay, it's time. Okay. And that's something that you have to, again, one of the biggest problems that people have when they're trading is they get too anxious and they want to be too early to the party. And remember, you're not going to sell the top. You're not going to buy the bottom. If you're trying to do that, you're going to lose money. That's a pretty simple process. I think it's, again, we're looking, is the S&P going to give us a potential buy? Not in my book. I could justify a trade, but it's not for us to justify trades. It's us to try to take the highest percentage of probability that gives us the best chance to win. And I don't see anything right now that gives us a great chance. Okay. And this is the problem, that in these types of markets right now, you're, like I said, you're in, let's say you got 6 trading days until the end of the month. And I think it'll get slower every day. Okay. There's a lot of vacations going on, not many participants. You can see that by the lack of overall volume in the market. Okay. I mean, here, look at the SPY. Okay. The SPY is trading at about half of normal volume. Okay. Maybe. And that does not put you in the best position. Okay. Again, I have no problem selling the call spreads in here because I do expect the markets to be stable or slightly lower by the end of the day based on what I'm watching. But certainly if you said, I don't want to get involved here, I could get that too. Okay. Remember, you make, when it's busy, you want to make a lot of trades. When it's quiet, you want to kind of sit on your hands. Okay. And too many of us start to see mirages in the markets trying to be too active in a market that you can't be active in. And anytime you want to learn how to lose $5,000 and $1,000 range, I can show it to you. I've done it myself a few times over the years. But this is why the discipline and the psychology of understanding that, there really isn't a lot of a high probability setup trade for me right now. So why am I trying to force myself into this market when there's a lack of opportunity? Okay. And again, it starts with this. Here's the 4-minute. There's no action. So if there's no action on the 4-minute, there certainly is no action on the daily. And these are things that you have to start to recognize, okay, as traders. Okay. And again, your time frame, whatever you're trading, if you're trying to be active, this is certainly not a market to get in. If you're more passive, there might be more opportunities. But of course, again, your risk is the key in the business. Okay. It's your risk versus the reward opportunities. And I don't see right now the reward because it's slow. I think you get potentially more drifts to the upside on natural. I mean, the dull market theory, the markets themselves are predisposed to go higher. Okay. If you look back in history, the markets have gone up year over year. But the markets, a dull market, if you've ever heard the old adage, never sell into a dull market, because again, buyers are going to overwhelm sellers when there's nothing going on. And that's why we watch. And in this market, which is pretty dull, it's hard to want to get overly involved because you're putting yourself at risk when your probabilities are much lower than they would be. Okay. That's something you have to remember. Again, you're playing. It doesn't matter what the name is up here. All that matters is what the chart's doing. Okay. Now, is there a possibility of a trade coming in crude again? Maybe. Again, it need a pretty big buyer to step in here quickly, but it could be. But certainly, if it doesn't get there, I'm not making the trade. Okay, this buy-in doesn't get up to here, which I don't think it will. But if it doesn't get up there, I'm not making the trade. Because again, I know I can see what's going on. And all day long, it's been doing the same thing. So you have to remember that when there's opportunity, you will trade more and you will trade harder. But when there's not opportunity, okay, it's better to stay on the sidelines. It's better to study the chart patterns that are appearing, because these patterns we're watching right now will appear over and over again. But sometimes they're appearing where you're not at an advantage, where there's times when you are in an advantage. And whenever there's a lack of volume, you are not in the advantage spot, you are in the disadvantage spot, because the lack of action takes away part of your probability. So if on a normal trade, we're a 70% favorite to be right and make money. Okay, right now, let's say we're 55% if we start taking some of these trades. You got to ask yourself, is it worth it for such a small edge to start taking these trades? My answer is no. Okay, I don't see any purpose or any reason to get involved in these trades because of the lack of activity. And as I said, as soon as I'm done here with you, I have one more interview to do, and then I'm done for the day, because I don't see opportunity. I see trouble. I see disasters that can happen, and I'm not interested. I don't need to trade today if there's nothing in my favor. And of course, now let's go back and take a look at this as we were watching it earlier. Now, if you're using a 4-minute, which is what I use most of the time, you're a little bit more active. This is one to look at now, but I'm not, you have to decide for yourself how active you want to be. Some would use a 10. They might use a 15. Again, there's no right or wrong answer to your secondary time frame. You must use a secondary time frame to trigger your trade to make sure that it's going in the direction that you think it's going to go. But again, I use 4 because I like to be a little bit more active, a little faster when I'm trading. Okay. But at the end of the day, you can use 4, 5, 10, 15, 20. None of them matter. It is all up to how you see and what you're comfortable with. Okay. But overall, we're watching a market that is just kind of wishy-washy around. And basically, you're seeing consolidation in the NASDAQ, although it's lower. Okay. You get consolidation in the S&P, although it's lower. So you're seeing pretty consistent action everywhere. The only thing that's got any real action right now is gold, which is dried up and it's down about $35. Okay. And you got crude that's going up. So again, I don't see a lot to do here. And I would think that I hope that you will take my advice and be very patient if you're going to get involved at all. But until Tuesday, we'll see you next time, everybody. Have a great day and be careful, and have a great weekend. We'll see you later.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.